Hey everybody, Jason Russell, branch manager, Caliber Home Loans. I just wanted to take a couple of minutes today and talk about the recent announcement of Janet Yellen as President-elect Biden's Treasury Secretary. So what does that mean for housing? Well, let's start with who Janet Yellen is for those who don't know. So Janet Yellen was the chair of the Federal Reserve under the Obama administration. Prior to the Obama administration, she had actually predicted back in 2005 that we were going to be headed for some really ugly times moving forward. So she kind of predicted that 2007, 2008 crash, if you will. And she also expressed quite a bit of concern about the U.S. economy earlier this year prior to the coronavirus pandemic due to very high levels of corporate debt. So she obviously didn't, predict a pandemic, but she did express that we had a higher elevated risk of recession this year, which sure enough came to pass. So again, she has a history of kind of leading the Federal Reserve through the Great Recession, if you will. She is very popular amongst Democrats, amongst Republicans, and amongst Wall Street. So, in today's really partisan, hyper-partisan environment in Congress, she actually will probably have come through that nomination hearing with very few bumps and bruises. She's really a bipartisan pick from the Biden administration incoming. So in terms of what she brings towards the economy, essentially her nomination is really signaling a push to increase federal spending to jumpstart the economy. This is kind of what we did 12 years ago to try and get out of that Great Recession. She's going to be lobbying to keep interest rates low as far as the Federal Reserve is concerned. She's a big fan of QE, or quantitative easing, which is helping to keep mortgage rates low now. And I think she's going to be really slow to get the government-sponsored entities, Fannie Mae, Freddie Mac, out of conservatorship, which we'll talk about here in a minute. In terms of her job now, which is different, right? She was the Fed chair previously. Now she's going to be leading the Treasury, and really, what that job is about, it's about understanding the market in a crisis, right? And running the Fed during our last crisis certainly prepares her for that. And she obviously has a good rapport with Jerome Powell, the current Fed chair, due to their past relationship with one another. So that's a good sign as far as that goes. What's a little different about this scenario that we're in versus 12 years ago is that housing is really a bright spot in the economy right now, whereas 12 years ago, it really was the reason that we ran into the Great Recession. So, we come into it from a housing perspective in a very, very different place than we were back in 2007, 2008. Right now, from a real estate perspective, the biggest risks, from a negative standpoint, really comes down to commercial real estate, right, where everybody's learning to work from home. I'm working from home right now, and so companies are going to really start thinking about, hey, do I need this lease, right? So commercial real estate is potentially at risk, and also small-time investors who own rentals. So obviously, there's rent eviction moratoriums and so forth going on due to the coronavirus. But there's not a lot of help coming for the actual people who own the rental property. So if they have a mortgage, if they're leveraged against that property, they can be in a pretty tough spot. So those are really the two areas I think that are probably the most risky as it relates to real estate right now. I think in regards to regulation, certainly, it goes without saying that any Democratic administration, Biden's included, are going to be a lot more active when it comes to regulation than the outgoing Trump administration. And while that certainly is true, I don't actually anticipate Yellen to crack the whip a lot as it relates to that. So as far as the Consumer Financial Protection Bureau, the CFPB, I don't anticipate that she's going to go back to regulating by enforcement, which is really where the CFPB started. And I think that she's going to continue to toe the line as far as regulating by instruction, which is really what has happened since 2016, which is good for the most part because they were a little punitive to start. Going back to the GSEs, government-sponsored entities. So Fannie Mae and Freddie Mac, which are the government-sponsored entities that back the vast majority of mortgages in America, they have been under government conservatorship since 2008. And the Trump administration had been, looking to get them out of conservatorship and back into private companies. And that didn't happen in time. If Trump had been reelected, that probably would have happened within the next 4 years. But Mark Calabria, the current head of the FHFA, is certainly showing some overtures to try and rush that exit from conservatorship, but getting a lot of pushback. There's just not a lot of time. I mean, we're talking 45 days or so before the new administration comes in, and that'll probably put a quash to that. So GSEs, Fannie Freddie, will likely remain in conservatorship. Not speaking to the shareholders of Fannie and Freddie, who have lost out on a lot of profits over the last 12 years because they've been swept by the government. I feel bad for them, but as far as homeowners are concerned, folks in the real estate world, I think it's probably a positive thing that the government stays involved with Fannie and Freddie, and those remain in conservatorship. So all in all, just from a housing perspective, not talking about the long-term aspect of all this spending that we're doing as a government, which certainly we can argue is a bad thing, just strictly from the housing perspective, and for anybody out there with a mortgage, I think Yellen is a fine choice as far as Treasury Secretary. She, it was a very exemplary shortlist, and she was definitely deserving of the job and well qualified. So I think all is good as far as that nomination is concerned, as far as kind of portending what it looks like for real estate moving forward. So if you have any other questions, or if there's anything I can do for you, please don't hesitate to reach out, and I hope you have a great day. Thanks.